Today we're doing a review on the Global X funds. They sell covered calls on their holdings, which generates extra premiums, which is then distributed to investors in the form of a dividend. About 10% dividends all these Global X funds pay out. And we make about $116,000 per year in dividends. So we're going to see how Global X funds play a significant role in my portfolio for getting these dividends up to $116,000 per year, as well as compare them to other top holdings in my portfolio, such as JEPI and Cornerstone, to see how they fare against them. So if we go into our portfolio, you'll see that the largest holding we have of Global X funds is RYLD. RYLD, it's the Russell 2000 covered call fund that owns Russell 2000 names and sells covered calls on those holdings. It yields about a 13% dividend, and I have it as one of my larger holdings because I need growth in my portfolio. A lot of my holdings in my portfolio are either bonds like GOF, or they're slow movers like Cornerstone. And in return for that slow movement, but the rather high dividends I receive from these funds, I wanted some capital gains appreciation, some movement in the stock price itself. RYLD will give you some of that. When the Russell was breaking out last year or the year before that, before the bear market, it actually trended well with the small caps. So upside will be capped in RYLD because it's a covered call fund, but it actually moves up a little bit when the Russell is moving up. It moves up somewhat in tandem with it. So I like that fact, but really I just have it for the 13% dividend, and it just meets somewhat of growth targets for me, because when you are looking at 10% plus dividend funds out there, you can't find them on small caps. So it not only meets growth needs for me in my portfolio, but it also is a small cap, and it's a small cap fund, and you have to have some type of hyper growth in your portfolio to keep things interesting. Now, I've been looking for other ways to augment this with better growth funds, and that's when I found OARK, which has a lot of small caps in it. So as RYLD pulls back in price, or small caps pull back in price, perhaps due to raising interest rates and the fact that, smaller companies can't sustain higher rates, maybe they'll pull back. And maybe that's why growth has suffered so far this year. If you look at the small caps, they've all been suffering. Well, as they pull back, I'll continue to pull money out of RYLD and instead put it into OARK. OARK's dividend is 40%, RYLD is 13%. So yeah, it makes sense for me to do this, especially since OARK's a newer fund. Why didn't I do this before? Because OARK just came out. So that's how I'm playing RYLD. It's just to give me some growth, give me a 13% dividend, but I prefer OARK. And so we're going to rotate money out of this slowly on any further weakness in small caps. Then we have QYLD, which is the NASDAQ covered call fund managed by Global X funds. QYLD, as you can see here in this tab. I don't own it. It has a 12% dividend. I don't own it because it's underperformed the indexes, and so I just sit here and sell puts on it instead. I got $370, 3.7 for each contract, so just round that to 4. 7 times 4 is $2,800, so I got about $3,000 just for selling these options on QYLD, selling puts. If I had had $10,000 in QYLD, I would have only made $1,200 on it by the end of the year, and my margin debt would have been, well, if you add $10,000 to $242,000, I would have been at $252. Then you give me the dividend back, just to say it makes $1,000 back, I'd be at $251 by the end of the year. That's not what I want with my margin interest. I don't want margin interest growing. So I sold puts on QYLD to pay down my margin interest. And instead, I'm getting my exposure in tech through other funds, such as Tesla, Clip, 50% dividend there, Tesla 60% dividend, BST a 10% dividend, but it moves upward, left to right on the chart. This is how I'm playing tech instead of owning QYLD. And then lastly, we have XYLD, and that's the S&P 500. That's what the Global X Fund sells its covered calls on, the S&P 500. Now, here's the reason why I don't own XYLD. If you go into the maintenance requirements of XYLD, you will see that it's 50% maintenance. Now what that means with 50% maintenance, see, 50% maintenance. That means that for every 1,000 I put into XYLD, 500 will be taken up. And I can't afford to do that because I'm running margin. So if I'm running margin levels that are getting dangerously high, like I'm getting in the 240,000 area, that's pretty high. Well, when this number is falling and it gets to 0, I'm in a margin call. So my account value is 369, but my available withdrawal is 124. This means that if that gets to 0, once again, I'm in a margin call. So if I put 1,000 in XYLD, 500 will come out of this available withdrawal. If I'm at 124, then I'm going to be at 123.5. So I prefer these lower maintenance names like JEPI and Cornerstone because JEPI and Cornerstone are 30% maintenance. That means for every 1,000 I put in them, only 300 is taken up of this number. So the name of the game is to squeeze out as much as I can out of these 30% maintenance names, which then gets my income up to a higher level. So my income of $116,000 per year is made possible by these lower maintenance funds because I can buy more of them, get more dividends out of them. Yes, it increases my margin debt, but my available withdrawal stays high. So I don't really care if my debt's high because my interest isn't that bad. I just care if this available withdrawal gets near 0. I'm only playing margin call escape games. All I care about, the name of the game is just don't get close to a margin call. It's just like a business. When you run a business and you own, let's say, a store, a corner store, you don't want to have too much debt in your store, so you just want to make sure that with the business that I'm running here with margin, yes, you can take out more loans. Yes, you can increase your margin, but you don't want to get over leveraged to where it's siphoning all of your equity out of your business. So I keep this at 0. I keep it above 0. If it's at 0, it's a margin call. So let's go into the Morningstar test for these funds. JEPI, we can see that it made on a $10,000 test. It's new, just like XYLG. JEPI made $16,000. Let's see what XYLG made, which is a fund that was brought to me by one of my subscribers. Really appreciate him for bringing me this. XYLG, it's done pretty well. It's made $14,000. So even with $10,000 invested during one of the worst bear markets ever, you're still up 20% in it, and it made you 40% in a short amount of time, from 10 to 14. So that's pretty good for XYLG. But I want to bring something to your attention to compare against XYLG. How about STK? It also has a similar dividend as XYLG. XYLG has about a 6% dividend or so, 6 or 7%. So does STK. But look at what STK made on a $10,000 test. It made 75 grand. So XYLD, let's go into that really fast, see what that made. This only made $20,000 compared to the index, which made $35,000. So that's why I don't like to have too much in these cover call funds. QYLD, same thing. It made only $20,000 because QYLD is the blue line. QYLD made only $20,000 versus its index. And then Cornerstone, which is one of my favorites, Cornerstone 4-star fund, it made $50,000 over the last 10 years. So it beats the S&P 500, it beats JEPI most likely, and it beats these global X funds. If you go in and just check out a chart of the SPY, you'll see that Cornerstone beat the S&P. The S&P made 40, Cornerstone made 50. So this is how I'm playing these funds. I'm using them for various reasons. Some not as traditional as some not as traditional as you would think. RYLD, I do it just to accomplish my growth objectives, and it's going to be switched out with OARK soon. QYLD, I don't even own it since it's underperformed the index. I just sell puts on it and get more income through the puts than I would through owning it, through getting the dividend outright. Plus, it knocks down my margin significantly by selling puts on QYLD. And then XYLD, we don't own that because it's 50% maintenance. I just explained to you the name of the game of avoiding margin calls and why I don't own XYLD. So I still think there's a place in your portfolio for global X funds. They still generate lots of income for you. They still did well. They just didn't outperform their benchmarks. So I also like to keep them in because the more diversification of these funds that I have, the more I'm insulated from one fund taking me down. So I just try to spread as much of my money around as I can in all these different funds that yield about 10% dividends. And it helps me stay diversified and, again, not get caught off guard by one holding dropping on me and dropping the entire portfolio with it. So RYLD, that's on the chop block for OARK. QYLD, we're going to continue just to own it through sold puts. My cost basis is lower than in the current market price. If you take $4 approximately plus the strike price, $20 minus 4 is 16, and it's trading above 16 right now. So it lowers my risk to sell puts in QYLD. It lowers my margin, interest, and it frees up capital to invest elsewhere, like in BST and these other names. And lastly, I like other cover call indexes like OARK, Tesla, and Clip. They have 50% dividends as well, but we've already done videos on those. Go see our past videos if you're interested in learning about those. So this is what I've done with my portfolio with Global X funds. They play a unique role in accomplishing my objectives for my portfolio using margin. I hope you could glean something from this, and I hope it acted as some sort of value to you. So please leave comments in the section below if you have any more ideas on funds you want me to cover, and I'll talk to you soon. Oh, wait. Sorry, I have one more thing to show you. Our performance and value is 17.89% for the year. The Nasdaq's up 18, Dow's up 3, S&P is up 9. So the Nasdaq's now beating us by a hair, but I think we'll get that back soon as OARK and these other funds start to outperform and we collect those dividends. So anyway, again, hope you enjoyed the video. Talk to you soon.